The U.S. economy posted stronger growth this spring following a sluggish start to the year, according to new figures from the Commerce Department. News.com has learned that gross domestic product, GDP, expanded at an annual rate of 3% in April, May, and June, marking a reversal from the 0.5% contraction recorded in the first 3 months of the year. Economists caution, however, that the rebound was shaped in part by shifting trade patterns linked to President Donald Trump's tariffs, and underlying growth trends remain slower than the previous year. The headline GDP figures were significantly influenced by changes in international trade flows. Imports surged early in the year, as U.S. businesses accelerated imports to stock up on foreign goods ahead of planned tariff increases. Because imports are subtracted from GDP calculations, that surge depressed the first quarter reading. In the spring, imports dropped as new double-digit tariffs took effect, reducing demand for foreign goods. This decline in imports made the second quarter GDP figure appear stronger, even though exports also fell during the period. Economists note that while the trade-related shifts improved the statistical reading for the quarter, they did not necessarily signal an improvement in domestic demand. Consumer spending, which is the biggest driver of economic activity, increased at a 1.4% annual rate in the spring, a pace slower than in previous periods, reflecting the impact of higher prices on household budgets. Over the same period, both business investment and residential construction declined, while expenditures by state and local governments moved higher, providing a modest boost to overall growth. Samuel Toombs, chief U.S. economist at Pantheon Macroeconomics, is projecting annualized GDP growth of only about 1% in the second half of the year, as consumers wrestle with increased prices for imported goods and businesses respond to uncertainty over the Trump administration's economic policies. "We expect the economy to lose more momentum," Toombs said. When averaging the first 2 quarters of the year, the economy grew at an annual rate of roughly 1.25%, marking a clear slowdown from the nearly 3% growth recorded in each of the past 2 years. A key measure that economists watch for underlying demand, real final sales to private domestic purchasers, which excludes trade and government spending, rose at just a 1.2% annual rate in the second quarter. That compares to a 1.9% rate in the first quarter, indicating that private sector demand has cooled.